Good afternoon, everyone. Let's wait for 1 minute. Okay, then we'll start. So today we'll be doing July 1st to 10th ESI Finance News. Okay. Let's wait for 1 or 2 minutes. Okay, then we'll start. Good afternoon, Sudhir. Okay, so let's start this. Okay. So the first news is about startup funding in India. It actually drops to 36% in the first half of calendar year 23. That means from January to June, the startup funding has been reduced to 36%. Okay, and as you can see from the infographics itself, you have to see this in this manner. Okay, so first of all, they have talked about 21, second 21, 22 and 23, and as you can see, in during 21 and 22, the funding was huge and it has been continuously reducing. So that's why even there is a very peculiar term going on in the circles, funding winter. Okay, which means all the startups that were full of cash because of the investors' money are now without cash. Okay, and right now we are at $3.8 billion of funding in the first half of the calendar year 23. Okay, as you can see from the news itself, that it has been dropped to $3.8 billion, and mostly the funding is under the sector, fintech sector, SaaS sector, software as a service, and D2C, which is direct to consumer. This is the portion that we need to focus upon. First, the highest is in SaaS, then D2C, then fintech, e-commerce, B2B, business to business, and logistics and auto tech. Okay, so within these things, the startup industry has got the funding. Next news is about CII Business Confidence Index, and the news is actually saying that it has been seeing a rebound because of the capital expenditure push by the union government. Now please all of you tell me, what was the capital expenditure declared by the union government in this year's budget, 23-24 budget, and also do tell what percentage of GDP it was. If you guys know. $51,000 crores. The budget outlay was $10 lakh crores of regarding capital expenditure, and it was 3.3% of GDP. Now can you tell what was the effective capital expenditure? These things we've already done in the budget MCQs also. Yes, Rishabh, you're right. What was the effective capital expenditure? And what is the percentage of effective capital expenditure to the GDP? So it is 13.7 lakh crores. Okay. Budget things are still very important from the perspective of phase 2 also. Okay. So we don't have to forget these things. And 4.5% of GDP. Okay. So please do remember these things. So as you can see from the budget outlay itself, the business demand has been seeing a very good rebound. So business confidence improved, driven by healthy domestic demand on account of capital expenditure push by the union government. Okay. So this is the value of the index. You can just remember it, 66.1. But these dynamic values are not that much important because these values keep on changing. Okay. As you can see, next state news is about smart cities mission. Okay. So here we will discuss about the parliamentary standing committee report with respect to smart cities mission and how it evaluated the implementation of smart cities mission that is going on. Okay, so first of all, let's look at some basics. That smart cities mission was launched on June 2015. Okay, initial outlay was 48,000 crores with 100 crores per year was to be given to each smart city, and 100 smart city was to be built all over India. Okay, so these are the basic things that you must remember because schemes are very critical in phase 2 examination. Okay. As you can see from here also, it was initially launched for over 5 years, but since the target hasn't been completed, it has been extended till financial year 24. Okay. Now let's see what are the details that have been found by the Parliamentary Standing Committee with respect to Smart Cities Mission. So the report says that Smart Cities Mission has only completed only 60% of the projects that have been sanctioned under it. But that news was of March 23. Right now, when you look at the portal of Smart Cities Mission, you can see 74% of the projects have been completed. Okay. And it also talked about various issues with respect to smart city project. It says the definition of smart city is still not defined. That makes it a bit difficult in implementation. Okay. And this thing is also important that we have to see what are the top performing states within the smart cities mission. So ironically, both cities are actually from Andhra Pradesh only. Kakinada actually is the top and Amravati is at the bottom with a completion rate of 0%. Okay. So I hope you understand these things. Next is about public sector banks asked to take action against frauds. As you all know, banking frauds, there has been some details with respect to banking frauds that have arrived within the RBI annual report. So, first of all, do tell me, between private sector banks and public sector banks, which bank has the highest number of frauds, reported highest number of frauds, and which banks reported the highest amount of frauds? You can tell that in the comment section. Okay. Does anybody know? This has been done recently in annual report only. So private sector banks actually reported the highest number of frauds, okay, and the highest amount of frauds. The total amount of the fraud is reported by the public sector banks, okay. So remember these things also. Don't forget these things. Still important for phase 2. Next is about Department for Promotion of Industry and Internal Trade has identified 106 companies under its Strategic Investment Targets Initiative. So under this initiative, what actually DPIIT is doing, so it is contacting 106 foreign companies. They are actually trying to contact their leadership. They are promoting India's brand and asking these leaders to invest in India, okay. And how they are promoting India's brand? So they are actually trying to lure these leadership by saying, by tax incentives, by mentioning about that how India is actually digitizing its whole economy, okay, and providing some incentives through production linked incentive scheme and various other schemes. They are actually trying to ask these leaders to invest in India. So you must have heard about the news of Tesla that is going to produce cars in India. So this is the recent news, okay. So that's why in similar fashion DPIIT is trying to lure leadership of 106 companies to invest in India, okay. Next is very basic news that RBI appoints P. Vasudevan as new executive director. So he was actually CGM of Department of Payment and Settlement Systems within the RBI only. So it is a promotional aspect, nothing from outside actually, okay. Next is about non-life insurers, see 14% growth in June. So very dynamic news. As you can see, this will keep on changing in the next month also, but we can just look at it that around what particular amount these things are actually going on right now. So it says that gross written premium in June was 20,112.8 crores, okay. So this has been released by General Insurance Council, okay. And but for the April-June period, you can see a reported growth of 17.5%. So monthly around 20% is the average, as you can see from this figure also. So this is a 3-month figure, multiplied by 3, you will easily get nearby this amount, okay. So whenever a question with respect to non-general insurance gross written premium comes, and if you don't know the correct answer, but you can have a broad look of that 20,000 crores is the monthly gross written premium. So we can easily do about that, okay. Next is about securitization volumes, surge 60% to 53,000 crores in quarter 1. So quarter 1 is April to June, okay. So very basic news, but here the concept is very important, that securitization involves pooling of loans, selling them to a special purpose entity, and a lender gets liquidity upfront. So as you must have heard about the mortgage backed securities, so this is similar like that only, okay. Here what happens is, let's understand this. So we are talking about securitization, okay. So in securitization there are 3 entities involved. So first of all, the banks is also known as the originator, that holds assets, which includes loans, okay, and then there is a special purpose vehicle or some NBFC that repackage these loans and prepare a financial instrument that are tradable in nature, okay, and these financial instruments provides first of all interest and also the principal amount, because these and the value of these instruments are based on these assets, okay. So this is the whole process of securitization, in which banks actually pool their different type of loans and give it to the special entity. This entity repackages this whole loan into a financial instrument that can be traded to the public, and the public that's gonna buy these financial instruments will provide liquidity that will flow to the bank, okay. So obviously these type of instruments possess various types of risks, because suppose if the debtor didn't repay its loans, then obviously the holder of mortgage-backed security will lose all the money and banks will be less affected, okay. So that similar crisis actually happened during 2008, okay, because people couldn't pay their mortgage and all these securities actually lost their value, and because of the interconnected nature of the whole financial sector actually got bust, okay. So as you can see from here also, NBFCs as well as housing finance companies have the most securitized loans worth 33,000 crores, okay. So the most primary instrument for securitization are NBFCs and housing finance. Next is about RBI RBI looking to enhance fintech regulations. So it's just a basic news that the RBI is posturing towards that, having a more standardized regulation towards fintech, because as you know, the fintech industry is actually growing and it's continuously innovating because of the recent advent of UPI, and you all know UPI is right now a past new, because there have been plethora of inventions. Right now we are actually talking about the interoperability of CBDC, which the SDFC bank has started, okay. So innovations are going at very fast scale that even recent innovations are looking like a past thing, okay. Next is about NPAs of public sector banks at multi-year lows, and this is because most of the banks have written off their loans, and this written off loans exceeded 10 trillion during financial year 2017 and 2023 period, okay. And can anybody tell what is the difference between write-off and waive off of the loans? Do try to give the answer with respect to this. I'll tell you afterwards, okay, before we'll go to the report section. Next news is about the details of fixed deposits with respect to how much Indians actually do fixed deposits on an average, okay. So in a financial, so around 42,573 is the fixed deposit average in India, okay. Delhi tops in the average. So here we are actually talking about average amount. So in average amount, Delhi tops the list, followed by Maharashtra. But when we are talking about the overall deposits, the whole deposits of fixed deposit nature, then Maharashtra has the highest amount with 25.14 trillion. Okay, so don't get confused with respect to, while we are talking about average, Delhi is the highest, but while we are talking about the total deposits, Maharashtra is the highest. Next is a report by Price about the middle class, that how middle class is actually going to grow to double by 2046-47. That is, by 100 years of independence, our middle class will actually grow to double. Okay. So right now we are at 31% and it is projected to grow at by 61%. Okay. So let's see what is it all about. Through infographics we'll understand much more better. Okay. So the categories of people has been classified into 4 things: rich, middle class, aspirer and destitute. Destitute, you all know, people belonging to below poverty line. Okay. There is the definition also. Destitutes refers to those with household annual income of less than 1,25,000. Okay, and this is annual income. Aspirers from 1,25,000 to 5 lakhs, middle class from 5 lakh to 30 lakh, and rich means more than 30 lakh. So reports are important from the perspective of phase 2 examination, and you must learn these classifications also while you are preparing these reports. Okay. So as you can see from the pie chart itself, that right now middle class is at 31% and aspirers are actually 51% more. Okay. So by 2047, so this blue middle class line will be the highest, 61%, and aspirer will also be 11%. And apart from the changes in the middle class section, you should also see how rich is actually growing from 4 to 26. So this is also a very huge change. So that actually determines that India is actually going to grow, and India's even gross national income and per capita national income will also increase as per this report. Okay. Next news is about foreign direct investment. So it says that FDI is actually up by 10% in 22, and India's rank within the FDI inflow has been remained unchanged. So this is a report by United Nations NABARD. Okay, and this is World Investment Report. So let's see the bit more details with respect to this. So it says that it rose by 10% and also remembers the value $49 billion in 22, making it the 3rd largest host country for announced greenfield projects. Okay, don't get confused by different types of ranks. Within announced greenfield projects, India is the 3rd largest host country. So that means for greenfield projects, India is the 3rd largest in actually gaining or for inflow of FDI in this sector. So similarly, 2nd largest sector for international project finance deals. So with respect to international finance deals, India is actually receiving the 2nd highest amount of foreign direct investment. Okay, so these 2 things are sectoral specific. You must learn these things accordingly. But overall report with respect to FDI inflow of India still remains at 8th rank. Okay, India still is on 8th rank. Let's see a bit more details about other things. That outward investment by Indian multinational enterprises also fell by 16%. So we nearby so we are actually getting around $49 billion of inflow and the outflow is actually $15 billion. Okay, so just have a broad outlook with respect to these figures so that you remember these things. Okay, or even if any question with respect to FDI comes, then you at least know that the answer should be within two figures and nearby to 50 or nearby to 15. Okay, this helps in doing such questions where we don't know the answers. Okay, next is about global FDI. Global FDI also declined by 12% in 2022 to 1.3 trillion. So these reports are actually very important. All the reports from United Nations and IMF, OECD, okay, and even WTO, all the major institutions, okay, World Economic Forum, and that we've also done, ECOSOC, World Bank. Okay, so reports of all these institutions becomes very critical for the perspective of phase 2 examination. So any report that these institutions have released in the past 6 months, prepare them very thoroughly. Okay. And as you all know, this slowdown of FDI is driven by global polycrisis. So polycrisis means various types of crisis: war in Ukraine, high food and energy prices, and debt pressures, and even monetary policy tightening. Okay, and the impact of COVID is still visible in the supply chain disruptions that has been exacerbated by the war in Ukraine. Okay, so as you can see from the infographic itself, that the top destination still US, China, Singapore, Hong Kong, Brazil, Australia, Canada, and then India. Okay, so see, we have all these countries that we need to go beyond in order to be a topmost FDI country. Next is about Bihar actually overtaking Tamil Nadu to become biggest microfinance institution market. So with respect to micro lending institutions or micro borrowers, Bihar actually is right now at the top with the borrowings of highest market borrowings. Okay, and this has been achieved through a 13.5% growth. Okay, so just remember that Bihar is actually right now leading the micro lending or micro borrowing. Next is about services PMI. It actually talks about that how services is actually growing. Okay, so growth in India's dominant services sector declined in June as inflationary pressures intensified, and this actually increased the input as well as the output charges. Okay, so just a dynamic news. Just have a look only, nothing is there. And even if you want to remember these figures, these doesn't become important until unless it is being talked about just before the month in which the examination is being conducted. Okay, so it actually declined to 58.5 in June from 61.2 in May. Okay, Sushil will try to do that, but report section is already given in the course, okay, in the paid course, and we will try to have at least an MCQ with respect to reports. Okay, this is a very basic news that SEBI is actually trying to have a new mechanism with respect to dispute resolution. Okay, nothing specific is in there. Next is about SEBI actually thinking about new framework for cybersecurity, because various digital frauds within the various banking frauds, 50% of the frauds has been reported under digital payments. Okay, so similarly SEBI is actually trying to strengthen the cybersecurity aspect. Okay, So this is the paper under which SEBI is actually thinking about having a new framework with respect to cybersecurity. So this is framework, Consolidated Cybersecurity and Cyber Resilience Framework. And here they are talking about 5 concurrent functions of cybersecurity, which is identify the threat, protect, detect, respond, and recover. So you can just have a look at this and you can remember these things. Next is important news. It's another report. It's a report from Knight Frank, okay, and it actually talks about mid-segment housing. Okay, so there are 2 types of housing. So first of all, you all know affordable housing, then mid-segment housing, and then the obviously rich segment housing. So it is talking about that rich mid-segment housing. The demand for it has been increasing in India, okay, in the calendar year 23. So this is a very good sign with respect to the demand in the real estate sector. So it says that the mid-segment housing sector has been jumped from 35% in the first half to 38% in the same period. And similarly, the affordable sector has reduced from 40 to 32%. Okay, so despite rise in housing prices, the mid housing segment has been receiving the increase in demand. Okay, so this is reported by Knight Frank report. Okay. Next is about Finance Minister to meet chiefs of public sector banks to review financial performance. Just a basic annual meeting. Okay, so the most important news is about record profit of 1 trillion reported by public sector banks in the last financial year, and the leader was State Bank of India, accounting for the half of this amount, so nearby around $50,000 billion. Okay. Next is about Iran joining SCO as India hosts summit. So important thing, this is very important from the phase 2 perspective. First of all, Iran is the newest member. This is 23rd leader summit. India hosted it. Okay, and now first of all of you tell me, after Iran joining the SCO, how many members right now are in the SCO? Tell me in the comment section. What is the total number of members right now? Yes, Rishabh is right. 9 members. Good. So let's just, in a quick fashion, let's have a look at who are the members. Russia, China, India, Pakistan, Kazakhstan, Kyrgyzstan, Tajikistan, Uzbekistan, and lastly Iran. Okay, so I hope you remember the membership at least of all SCO. Yes. Okay, so do remember this. All the details with respect to this news becomes very important for you. And this is the year in which India and Pakistan simultaneously joined Shanghai Cooperation Organization. Shanghai. Okay. Next is about Bharat 6G Alliance, launched by Telecom Minister. Okay. And what is the target of this alliance? So they want to at least create 10% of 6G patents from India by 2030. Okay, so they want to become the first global working 6G ecosystem, and that's why they are targeting at least 10% of 6G patents to come out of India by 2030. And for this, they have actually granted a 250 crores outlay. Okay, and this is under Telecom Technology Development Fund. Okay, next is about weak rural labor market. That means unemployment rate in rural area has increased, and this is generally in the April to June period when the demand for casual labor is low, and this will be reflected in high demand for Manrega jobs. Okay, so you can at least build a conceptual understanding that why these things happen during this time of year, apart from the figures that we all learn. But right now it is from above 8%. Okay, what is the exact unemployment rate? It is 8.545%. CMIE actually released that report. Okay, next is about new manufacturing projects dip in June. So this is about new projects being approved in the manufacturing sector. Okay, so this is the again reported by CMIE. Okay, so in June the new investment projects reported a decline. And what is the quantum of decline? 4.48%, sorry. Okay, from 1.6 trillion in March to a 85,000 crores. Next is about manufacturing PMI softens in June, still at 6 months high. So this is about managing purchasing managers index. So above in PMI, values above 50 represents expansion, below 50 represents contraction. So as you can see from this figure of manufacturing, in June also 57 is the reported. That means expansion of manufacturing activity is actually going on. It was at this point of time, that means near March of 21. That was the second wave of COVID. It actually went beyond the contraction phase. Okay, so apart from this, it has continuously been in the expansion phase, as you can see from the PMI index. Okay, now let's move on to the next question, which is a dynamic news. 76% of the 2000 rupees banknotes returns to banks till June 30. So it is an ongoing news. The important thing is that you remember that September 30 is the last date to return all the 2000 notes. Okay, rest is very dynamic, not important from the perspective of examination. Another news is about import of potatoes from Bhutan sans license, that means without license. Okay, so this has been extended till June 24. So India has allowed import of potatoes without license from Bhutan till June 2024. Okay, and the total amount of imports has been reported $1.2 million in 2022-23. Since the quantum of import is very low, so this has been, and Bhutan is also a very friendly country, India has been extended this. Next is about banks post robust credit growth in financial year 24. Okay, first of all, can all of you tell what was the bank credit growth as mentioned in Financial Stability Report of June? What was the bank credit growth? Bishop says 15. Yes, this is correct. 15.4% was there. Good. So this says that Bank of Maharashtra is actually reported 25% of year-on-year growth. Okay. So this is obviously higher than the 15.4% reported by Financial Stability Report of Reserve Bank of India. Okay, this is another basic news. A directive from Finance Ministry to the Bureau which was earlier Bank Board Bureau, right now Financial Services Institutions Bureau, to actually fill up the vacant posts of chairman in public sector banks. Okay. Next is about 18th G20 summit, to be the biggest international event hosted by India. Okay, this will be on September 9 to 10th. Okay, first summit in South Asia. It will host largest delegation of 43 heads of states. So these are the important pointers that is important. Also 2 tracks were there, finance track and Sherpa track. These are the members. You should also remember the members, because sometimes question also arrives with respect to the membership of G20. They may ask whether Singapore is a member of G20 or not. So can anybody tell whether Singapore is a member or not? So in May sector, we are actually talking about lending to infrastructure sector. So the report talked about that it has been reduced to 1.8% in May. Okay, compared to 9.8% in May 2022. Okay, so year on year it has been declined by 8%. A dynamic news mostly. Similarly, another dynamic news which is about FPI investments. So right now, actually FPIs are inflow is right now 10-month high. So around 47,000 crores they have invested in the Indian markets. Okay, so just remember the figure, but nothing important from the perspective of examination. Next is about rules of origin, delay free trade agreement tariff discussions with European Union. So rules of origin is very important. Because of this factor, India opted out of RCEP, and rules of origin is actually concerned about the origin of the product. Okay, so we are talking about rules of origin. So to understand rules of origin, we have to understand a product cycle. Usually a product is manufactured somewhere, okay, then assembled in some other country, then some value additions in another country, then sold in another country. Okay. So suppose it is manufactured in China, assembled in Singapore, value addition in Hong Kong, and they are trying to sell it in India. So since India and Hong Kong have a very free trade agreement, but the product is actually manufactured in China, so until or unless we have a rules of origin regulation within our FTA agreements, China's products can be easily dumped to India. So China's cheap product can be easily dumped to India, and through Hong Kong, China can actually benefit. Okay, so this is the rules of origin, which is actually concerned about where the product is manufactured. Okay, and it is not concerned about from where the product is being traded. Okay, so I hope this distinction is very much clear. Okay. So this is the only hurdle that is going on with the FTA negotiations with the European Union. Okay. Next is about corporate social responsibility. Okay, that Ministry of Corporate Affairs is actually saying that CSR plans should be self-sustaining. So what do we mean by self-sustaining? That it should not be like that for the sake of 2% CSR that you do some like giving foods or giving some clothes or some non-durable items to public. It's not like, it should not be like that. You should use these funds, build a sustainable solution that can be persisted throughout times. So suppose if you install a water purifier plant in any village, such projects can be self-sustaining. Okay, so we have to move from these things towards self-sustaining projects with respect to corporate social responsibility funds. Okay, so this is the whole directive from Ministry of Corporate Affairs. Next is about housing loans. See steady growth, and by looking at this news, you can easily connect it with the mid-housing segment report that we just discussed earlier. In that report, you must have seen that how, despite the price rise in the housing sector, the demand for mid-segment housing is very much higher. And if that demand is high, obviously housing loans will obviously see steady growth. Okay, because through loans, people do usually buy houses. Okay, so in this manner, we can easily remember these things. In this manner, we can easily relate also, and we can connect these things, and we can write such answers in descriptive questions. Okay, now we can just remember the figures, what is actually being talked about, that it was the share of residential housing in total advances has increased to over 14.2% in March 23. And this is very much higher than the 8.6% in March 2012. Okay, so try to link the news in this manner, you'll be able to much more remember these things. So next thing is about the merger of HDFC as well as HDFC Bank. So the merger has been approved with effect from July 1st, 2023. Okay, this has been announced a way back, very few months back. Okay. And it has actually created the HDFC Bank as the 4th largest bank after the merger, with a market capitalization of $180 billion and 14.73 trillion rupees. Okay, and it is saying that on July 13, shareholders of HDFC will be issued shares of HDFC Bank. As you know that both of these banks were listed on the stock exchange. After the merger, HDFC shareholders will get shares of HDFC Bank. Okay, because the stock of HDFC will stop trading on, that has stopped trading on July 13. Okay, so as you can see right now, this is the world's largest banks. So first of all, this is very important. JP Morgan is the top bank, Bank of America, Industrial and Commercial Bank of China, then HDFC Bank. $180 billion market cap. The topmost have $419 billion market cap. Okay, so remember these ranks also. This news is just actually a good thing that 6 years of GST raking has at least provided us a continuous 1.5 trillion tax monthly to the government. So right now 1.5 trillion monthly is actually right now average. Initially it was 1 lakh per month. Okay, sometimes we would see 1.5 trillion within a month, but right now 1.5 trillion is the norm per month. Okay, so this is being discussed in this article. Next is about Manrega work, demand rises. As I've already told you, that you must have remembered the news just now that we have read that unemployment rate in rural areas is right now high. But people will still want to work to feed their families. So naturally the demand for Manrega will go up. Okay. So this is the news that actually talks about the same thing. As you can see, the demand for month on month is highest since June 2021. Okay. So the work demand usually goes up high in April to June, as there is very little work for manual casual labor. Okay, so in this manner, please try to link the news so that you can easily generate more points within your descriptive answers. Next is about government is actually approving the first domestic regulated carbon market. Okay, so it is drafted by Bureau of Energy Efficiency under Ministry of Power. Central Electricity Regulatory Commission will be the carbon market regulator, and as you all know, carbon credits will be traded on such markets, and this will actually fulfill the ESG norms of corporate sector. Okay. And Grid Controller of India will be the registry for Indian carbon market, that it helps in which entity has how much carbon credits, just like depository like CDSL do in stock market. Okay. Next is about core sector output in May expands at 4.3%. Another dynamic news. See, in previous classes I've already told you that these figures don't usually come in the examination, but who publishes index of 8 core industries, what is the percentage of index of 8 core industries in index of industrial production, these static things usually come in the examination, and this question of index of 8 core industries actually came in the RBI phase 1 examination. Okay, so remembering about these things become important, and even a question on who publishes CPI, agriculture labor, rural labor, this thing also came, this question also came. So static things about indices are very important because these are the only thing that doesn't change and remains constant. So organizations like IBPS usually actually focus on this. Okay, so prepare these things. Prepare the weightages of CPI also. So as you can see from the figure itself, the overall growth of index of 8 core industries, initially you must have seen these volatility, but overall it has been hovering between 4 to 5%. Okay, next news is about fiscal deficit at 11.8% of FY24 budget target. So can anybody tell what was FY24 budget target? Also do tell what was last year's target FY23 and what is FY25 target. Yes, Rishabh, you're right. All of this for this year, that means FY24, it is 5.9%, 6.4% and 4.5%. Remember these things, important. Next is another news related to small saving schemes, interests being raised by the government. Okay, so for 1 year, 2 year and 5 year recurring deposits, the interest rates have been increased. by 10 basis points, that is from 6.9% to 7%. Now let's move on to the regulatory body news. Okay. So first news is about SEBI disclosure with respect to, SEBI disclosure norms with respect to FPIs. That means foreign portfolio investors. These norms were actually published by SEBI in context of Adani issue. That recent Hindenburg report and the recent crisis in Adani stocks, and because of this, actually SEBI is trying to see that whenever a foreign portfolio investor is actually putting too much amount within a one particular corporate, so they want to know whether the same owner is not doing that thing, because when you channelize investments from other countries, you can easily remove or protect your identity because of certain rules and regulations with respect to FPIs. But right now, SEBI is actually saying that we want your identity or disclosures if these two conditions are met. So what are these two conditions? That if a FPI, that is foreign portfolio investor, is actually putting amount more than 50% of his portfolio in a single group. That means if I have a portfolio of 1 lakh rupees and I am putting more than 50,000 rupees in any corporate, be it Tata, be it Adani, okay. So I have to tell about ownership, economic interest, and what are the people in control of within that, if I have a company that invests, okay. And another condition is that holdings of over 25,000 crores in domestic equities. Then also you have to list out these things. Okay, so I hope you understand these things. What is important from the perspective of examination? These two conditions are important. And what actually is asking, the SEBI is asking about in details is also important. That is ownership, economic interest, and names of people in control. Okay. So there was a report by Prime Infobase after this SEBI circular. So it says that close to 100 FPI, foreign portfolio investors, will be exposed by this SEBI circular. So they'll have to disclose all the information that this circular talked about. Okay. Next is about SEBI mulls, 10% of trades via request for quotation route. So it is talking about the corporate bond market. As you all know, it is a debt market where corporates issue bonds, okay, and collect money from the market. But why SEBI is actually saying that 10% of the trade should be through a request for quote platform? Because this platform is like a stock exchange, or you can say bond exchange, okay, a formal platform where there is an entity which facilitates the selling or buying of corporate bonds, okay. And this becomes beneficial for SEBI because this is very formal in nature. But right now, all the corporate bond market deals happen in over-the-counter market. And what is over-the-counter market? In over-the-counter market, suppose me and you want to deal in a corporate bond dealing. Okay, so I'll just call you and I'll just negotiate with you what should be the price I should sell or what should be the price you should buy. Okay, and we'll just have a deal with ourselves. And this process, as you all know, nobody knows about these things, and nobody also knows that what is the price at which we've actually discussed about this bond. Okay, so to remove opacity and to remove anonymity, And to make the whole corporate bond market formal, SEBI is actually saying that 10% of the corporate bond market dealings should be on the RFQ platform. Okay. So this is the whole news. You can read this for any details. Next is about SEBI clears path for self-sponsored asset management companies. As you know, you must have heard about Aditya Birla Sun mutual funds. Okay, here the sponsors are Aditya Birla and Sun. Okay, so these sponsors provide money to mutual funds. Okay, and the manager who is actually trying to manage this whole mutual fund is AMC. So what do we mean by self-sponsored AMC? That the manager itself getting detached from the sponsors. So that means lowering of equity or the promoter's equity from the mutual fund. So right now they must be having around more than 50% of stake in the whole AMC. But if we reduce sponsored stake in the whole AMC below 50%, then obviously this whole mutual fund company can be called as self-sponsored asset management company. Okay. But SEBI says that there should be some rules and regulations before any asset management company can become self-sponsored. So what are these rules and regulations? That any AMC willing to become self-sponsored should have at least 5 years of experience. Okay, with strong financials, that means positive net worth and minimum 10 crores net profit in all the previous 5 years. Moreover, sponsor planning to move out should have been a sponsor for at least 5 years. Disassociating sponsor will have to mandatorily bring down its shareholding to below 10% within 5 years. Okay, so these are the basic details upon which the SEBI is actually trying to lay down a framework where the sponsors of AMCs can reduce their equity and make the AMCs self-sponsored. Okay, next is about RBI panel suggest various measures to push rupee beyond borders. That means internationalization of rupee. It is a very important and hot topic. This topic can come for RBI phase 2 also. So you can prepare from this news article also, because this news article provides you the ways through which we can actually focus upon internationalization of rupee. Okay. So first of all, who is the head under which this panel gave the recommendation? Radha Shyam Rathore. So Radha Shyam, sorry. So this panel led by Radha Shyam Rathore talked about various types of measures that we can take as a country to increase internationalization of rupee. So first of all, what are these measures? Let's learn about these things. Okay. So these are the recommendations. For anybody who is preparing for civils also, this topic is important, and these recommendations of Radha Shyam Rathore also becomes important, and you can easily quote these pointers in your GS3 examination. Okay. So first of all, opening of rupee accounts by non-residents. Okay. Inclusion of Indian government bonds in the global indices. Integration of onshore and offshore forex market. Waiver of the withholding tax for masala bonds issuances. Expanding the RTGS system for settling international transactions, for settling bulk international transactions. Banking services in rupee through offshore branches of Indian banks, and inclusion of rupee in the IMF SDR basket. So, can anybody tell how many currencies are there in the SDR basket of IMF? And also do tell what currencies are there in the IMF SDR basket? First of all, tell me the number. How many currencies are there? Anybody? Take a guess at least. Devesh is correct. 5 is the correct answer. And what these currencies are? Dollar, euro, yen, and pound sterling. And what's the last? Renminbi, which is China's currency. Yes. Good, all of you, well done. Okay. So this is the recommendation of. Above were the direct recommendations. If you want to learn about these things in detail, you can look at this document. So we'll talk about the greater use of rupee in invoicing and settlements in international trade. This we've already discussed. And what are the benefits of with respect to internationalization? It allows the country's exporters and importers to limit exchange rate risk. This is the most primary benefit with respect to internationalization of rupee, because right now we suffer on account of dollar appreciation and increase of our import bill. Okay. What else will be there? Lower cost of capitalization because of better access to international finance markets and high seniorage and reduced requirements of foreign exchange reserves. Okay. Next is about certification of ESG rating providers, a must. So these companies, that is ESG rating providers, okay, so these actually provide certificates or ratings to companies with respect to their compliance of ESG norms. Okay. So to prevent any credit rating agency to bring or give a biased rating with respect to ESG compliance, SEBI is actually saying that these ERPs also must possess a certificate of SEBI, so that we have a very formal and transparent credit rating environment. Okay. So that was the most thing in this news, and this is the main criteria with respect to ERPs that the SEBI has talked about, that the promoter of the ERP will have to maintain a minimum of 26% of shareholding for at least 5 years from the date of registration. Okay, and they've also been barred from undertaking any activity other than providing ESG ratings. Okay, next is about RBI releases financial stability report. Although this is just an article, but you must prepare this report thoroughly. Very important for phase 2 examination. Okay, you should, if you find going through the whole report very cumbersome, you can actually go for Financial Express of that particular day, okay, when the report was actually released. Okay, and then you just read all the articles with respect to Financial Stability Report. Okay, this will be a actually sufficient for all of you with respect to financial stability report. All the reports will be sufficient. Okay. But before that, let's have a look that capital to risk weighted asset ratio is 17.1% in March 23. Okay, and gross NPAs fell to 3.9% and net NPA declined to 1%. So these things are important, and this stress test is also important. It talked about when we are under baseline scenario in March 24, the CRAR will be 16.1%, but if medium stress will be there, it will reduce to 14.7%, and in severe stress, the CRAR will be reduced to 13.3%. Okay, so please focus on reading upon financial stability report from any particular newspaper that you can do. Why I recommended Financial Express? Because you can easily get e-paper on the internet. Okay, so it is actually providing free e-paper. Okay, so this is all in the first part of July news. Okay, we'll meet in the next session and we'll talk about the next July part. Okay, if you have any questions, you can tell me. Otherwise, we'll end the session. Thank you, Sushil. Okay, yes. Rishabh rightly pointed out that we were discussing about write-off and waive-off. In both cases, banks actually remove the loan amount from their balance sheet. Okay. So first of all, the primary thing is, in both the cases, the amount of loan that is either being written off or being waived off is removed from the balance sheet. But when the primary difference between write off and waive off is, when waive off, the potential of getting back the loan amount is 0. Okay, that's why you must have heard about loan waivers in the case of farmers, that bank actually waive the loans. They don't want the loan amount back, but in write-off, although they have actually written off, that means removed that loan from the balance sheet, but the bank will continue to persist getting back the amount from the debtor. Okay, so this is the main difference between waive off and write off. Okay, probability of getting back. Anything else? So thank you for joining, all of you. We'll meet in the next session. Okay, thank you so much.